Hey guys, Alchemist here. In this video, I'm going to be breaking down this long opportunity, which was in the London session of Friday the 27th of January. Towards the end of the video, I will also show you the Discord to show you that I had actually posted this in the Outlooks, and also show you a couple of the members who were able to execute this exact trade in the exact manner I would have. So congratulations to Carts and HZ, shout out to you guys. Before we get started in this trade breakdown, I did also want to let you know that I have now started a separate Discord channel for experienced traders, which will include my outlooks, my end of day markups, a breakdown of all the trades that I've taken, as well as a live Q&A session, which will be held on Zoom once per week for any questions that you might have throughout the week. Now, for a limited time only, you can actually join this Discord for free for the next 2 weeks. So make sure to click the link in the description below to join that Discord for free and see what it's all about. After those 2 weeks are up, you'll have the opportunity to continue as a member for $10 per week, which will be charged monthly, so that you can continue to get those outlooks and join that Q&A session as well. When you are a paid member, you will also have access to all previous webinars, as well as 5 webinars from the actual Millennial Wealth Group mentorship course. So now that that's all out of the way, and if you do have any questions, please do let me know. Let's get straight into this breakdown. So this was a trade that was in the London session. I personally did not take this trade. I'm only trading Asia at the moment. So I will now hide all of this and we'll break it down together. So I'll just come into here and hide these. Go back to full screen and let's first replay a little bit earlier, and we'll go out to the weekly time frame. So on the weekly, we know that we're now coming into this unmitigated section of this supply. Now this week, I believe, has actually closed above, but at the time it hadn't yet closed above. So we didn't know that this supply was going to fail. And the demand zone is still going to be the same demand zone that we have been using for quite some time. If we do now close above this supply, we will have a new demand zone in here as a flip of this supply. So that's yet to be seen at the time that this trade was taken. So this was the ruling demand at the time, and this was the supply. So on the weekly time frame, that's all that we can do. We'll jump down to the daily. In terms of the daily, when we've tapped into the weekly supply here and had this bearish pullback of greater than 110 pips, this was our daily high at the time. And as you can see here, we actually had a body close above. So this now becomes our daily boss. And the lowest point below there is going to be our daily low. Daily low. And then we're not yet sure of where our daily high is, as we've only had a bearish pullback of 60 pips, therefore less than 110. So we haven't yet set our daily high. Let's go down to the 4 hour. And on the 4 hour, our structure points are actually the same as they are on the daily. So this daily boss is actually our daily plus 4 hour boss. This daily low is the daily plus 4 hour low. And again, we haven't yet had a bearish pullback of 90 pips for this time frame to confirm our 4 hour high. So we don't yet know exactly where our 4 hour high is, but we can start to draw some POIs. So again, we're not exactly sure where premium is. It can still continue a little bit further up. But if we were to say that the retracement was going to start from here, we can see that this here wick, this is going to be the first demand zone that's going to be resting within discount of the 4 hour leg, potentially, because price still can have room to the upside. So let's identify a few more POIs. We have the extreme here. We have this demand zone. We have this demand zone, which the wick has mitigated. Then we can push up and we've created. So here, this here is a supply, which I'll mark in a second in the wick. And when we've interacted with the wick, we've pushed down, we've set this inside bar, and then the lower wick here before we've pushed back up. So I'm using this whole range here as the demand. And what we can see is we've actually got inducement right above this range too. So this is a nice potential zone for the future to be tapped. So this is liquidity to be swept. And in terms of supply, we just really have this one at the moment. Now this was the supply that was flipped when we had the 4 hour boss. And whenever we're marking demand zones like this, we need to be marking the corresponding supply that they've flipped. So that we'll make sure that we do so now. Perfect. And this is just mitigating that weekly supply above. And again, we do have this demand zone. And then this week as well, acting as a new demand zone. Perfect. So that's all we need to do on the 4 hour. We'll jump down to the 15. Now, 15-minute structure. This at the time was our 15-minute high. And what we can see here was we had one candle closing above, but then the next candle closed back below. But if we draw the line all the way across, we do see, if we zoom in a little bit, that this next body also does close above that previous 15-minute high. So I've gotten this question quite a few times. The high doesn't need to fail with 2 consecutive body closes. It's just 2 closes. So even though there was quite a lot of time between these 2 closes, once that second body close has closed above, that's sufficient in identifying our new 15-minute boss. So therefore that's the boss. Highest point above our boss is going to be our 15-minute high. And then we have our 15-minute low here when we had a bullish pullback of greater than 22 pips. Beautiful. So these were 4-hour ranges. Let's now refine them a little bit. We'll push this here to where the 15-minute actually mitigated it. And then we can take the top of the inside bar to the bottom of this wick. And we can see we've actually swept here. Beautiful. And then along the way up, let's identify some supplies. We'll also drop our premium and discount so we know how we're priced. With the extreme up here, we have this wick. But as we can see, this next wick has actually mitigated a portion of it. So we're interested in the part that remains unmitigated. Now, this wick itself, we can see that here we have these buy to sell wicks. So I'm using those as 2 separate zones in this case. When price has then tapped into it, we've created this supply, which was mitigated by this wick, which now remains unmitigated. Okay, we have this slight tap into it. So again, we can just refine it to the portion that's not yet been mitigated. And then we have, in terms of demands, we have this demand. Okay, I will just take 1 candle back. We have this inside bar that flipped that supply, which we will want to cover the bottom of this wick with as well. And we can see as well that actually was swept, which facilitated this bullish pullback that we see here. So this here is a sweep. And we also have these buy to sell wicks, which led to this demand. And again, we always need to be showing what its corresponding zone was. So if it's a supply, it's corresponding demand. And if we're drawing a demand, where's its corresponding supply? And so the last one we need to draw here is going to be this one. Beautiful. So 15M is bullish. Price has come into premium. It's then turned bearish in terms of order flow. So we have a shift here. Okay. And as we see in a moment towards the end of the video, I'll show you the outlooks in the Discord to show that I was stating to the members that longs were going to be valid from this zone, regardless of order flow. So even though it's against 15-minute order flow, it's pro 15-minute structure and 4-hour structure, and it's in discount, right? There's lots of different things that we need to keep in mind for when we should be entering a trade and where we should be exiting. But to take the thinking out of it for you, you just need to follow the flowcharts that I've created. In terms of if we were to be framing up a long from here, well, where would our target be? So this here, this supply zone has set a lower low, lower than this low. So we'd be taking this as a supply. Okay, and we can include the lower portions of this wick as well, and we can see a lot of bearish momentum entered here. In terms of targets, the simplest way to be doing it is taking 25% of the range, and then we can also refine it down on the 1 minute if required. So we can potentially be saying that this is where we should be targeting. Okay, we've now tapped into this demand zone. The first tap here has given us somewhat of a reaction, but all members of Millennial Wealth Group must be waiting for a specific liquidity model, a specific liquidation model to occur before we can place our entry. So the next candle down taps back into that 15-minute range, the 15-minute demand, sorry. And if we go to the 1 minute, what we can see here is that people who got in after this first chock that didn't wait for a specific liquidity model to occur, they were all swept. Once these early entrants were swept, these early participants, these early buyers, once they've been swept, then we can enter, right? It's a way that I've created to make sure that we don't continue to be swept. This is one of many different liquidity models, and you'll know exactly how to execute them once you join the course. So once they were swept, we then here have a 1 minute change of character. Okay, when we have this body closing above. So this is our chalk up. Price has gone a little bit further, so let's just bring those candles back here. And then when we look at this piece of price action here, we can see that here we have the extreme as a demand. And then we have this very, very small POI, which mitigated the extreme. Within this piece of price action here, there's no flip. So this is the supply. We don't have buy to sell wicks because we don't have a wick on the bottom of this body. We don't have another POI or anything. So this is really that last point where price pushed up, the last sell before the buy that caused the change of character. But if we are looking to enter from here, because it's such a small range, my advice is to always be covering the low, the extreme itself. So the low of this candle is 45. So we wanted at least 42 and push this up one. And then 1.7 pips as a stop loss is quite narrow, so we'll just use 2 pips. So majority of the time we are using 2.5 pips at Millennial Wealth Group, but sometimes when it's a zone like this where we're still covering the extreme, but we're actually entering off a different POI, we can just be using 2 pips just to increase our RR a little bit more. In terms of targets, as we saw before, it would be the top of this, the 25%, sorry, of this 15-minute supply range, which results in 8.35R. And because it's a 2 pip stop, 8R is going to be our 8 pips is going to be our 4R. So then that is when we will be taking 25% of our trade off the table as a partial to make sure that we are covering our risk. So in the next couple of candles, price comes and tags us in, has quite a nice reaction up, leaves an inside bar, and then pushes to our partial. So we'll move this across one when we got tagged in to see that we had risk off the table within 8 minutes. And then the whole trade itself didn't take too long either. I believe it was 32 minutes and did continue for much longer as well, but we are more than happy with the results that we've had. So this one here, 33 minutes, sorry. So 33 minutes, just over half an hour, and you've made more than 8R, and this is just in one trade on a Friday night. So again, our targets here are 5R per week. Majority of the members are using 0.5% risk per trade. Some members are using 1%, but at 0.5% risk and only targeting 5R, that gives us 2.5R for the week, which over a month is just over 10%. So that number should be ringing bells in your mind if you are looking to get funded, because that's the majority of FTMO, MFF, all those kind of guys. They'll be looking for that 10% return per month. So when you break it down into small chunks and know exactly how much you need to be making, then have a system in place to know exactly how to execute and where to enter and exit the market, then you're laughing. You just have to follow the steps and execute flawlessly as a robot would. So if you're interested in learning more about that, please do let me know. Book in a free call below or join the free Discord for the next 2 weeks. But otherwise, let's now have a quick look at the Discord to show you the outlooks and to show you how the members call this trade as well. So looking at the Discord here, this here is the 27th of January, just as we showed. And again, I'll always be posting the daily, the 4-hour and the 15-minute. So this is that same piece of price action, that same demand zone that we were looking at. And I did let the members know that longs here are going to be valid regardless of order flow. So although we did have a bearish chock here, that didn't matter because based on how we were positioned in terms of structure, in terms of premium discount and everything else, this was going to be a valid setup. And I was just targeting this one because we then could be going lower to this extreme, the unmitigated portion of it. So minusing that little bit of the wick before then seeing if we were going to continue bearish and have a 15-minute bearish chock down, or if this demand zone was going to hold and set a new 15-minute high. So this was the outlook, which was posted 25 minutes before London Open. And then we'll actually show you here. So HC, shout out, well done, man. He took the trade exactly in the same manner that I did. Here was his break-even point where he's taking 25% partial. He's used the exact same POI, made sure to cover the low, and used a 2-pip stop loss. He refined the 15-minute range on the 1 minute, but it still sort of led to pretty much exactly the same place, and he took it exactly 8R off the table. And Carts as well, shout out, man, well done. He's taken it at 8.2R, which is just below 25% of that 15-minute range, both executed in the exact same manner I just broke down to you as well, because there's a mechanical way behind exactly every single step in what we do. If you've watched a few of my videos now, you'll see it's very structured in what we do. So if you are interested in joining and taking all discretion out of your trading to make sure that you can be on the right side of the market, have realistic expectations, and then continue to grow and scale your account, join the community today. It's only going to get more and more expensive as we take more people on because my capacity is going to be limited. So join the free Discord if you want. That it's only going to give you access for 2 weeks. So this is that free one. The exact same outlook was posted in there, but you're not going to get one-on-one time with me at all. Whereas in the course, you do get 2 one-on-one sessions with me. And this will have 1 live session per week, which will have multiple members in it. Whereas the other one, you get 2 Zoom sessions with the community, plus 2 one-on-one sessions, just you and I, so that you can flesh out anything that's on your mind. So if you do have any questions, let me know, or book in a free 15-minute call in the description below. Otherwise, I hope you have a great week ahead, and I look forward to speaking to you in next week's YouTube video. Thanks, guys.